SpaceX is about to become one of the most valuable companies on earth as it debuts on IPO at a whopping valuation of $1.77 trillion US. If you're asking how do I buy SpaceX, there isn't just one way to buy SpaceX. In fact, there are at least 5 different ways investors can gain exposure to SpaceX. Some involve owning SpaceX directly, others involve benefiting from the SpaceX ecosystem. And in some cases, the indirect routes may offer better risk-adjusted opportunities than buying SpaceX itself. So today I'm going to break down the 5 main ways investors can get exposure to SpaceX, the advantages and disadvantages of each, and one important lesson investors miss. So let's dive in. Once again, I'm Coco Umbo and you're welcome to the Data Investors Playbook. The first one is direct IPO allocation. Getting shares directly through IPO is the closest thing to owning SpaceX before it starts trading publicly. So in theory, investors that get allocation receive access to shares at the IPO price before public trading begins. But the challenge is access. Historically, IPOs tend to favor institutional investors, large wealth management clients, high net worth individuals, and long-standing brokerage relationships. In other words, most retail investors hardly receive allocation for most of the largest IPOs. Even when allocation exists for retail investors, demand always exceeds supply by a very wide margin. And since SpaceX is only floating 4% of its company, which is about 550 million shares, and retaining about 25 to 30% of this portion for retail investors, a lot of retail investors will still not get an allocation on IPO. The next one is retail broker allocation. So since SpaceX intends to retain a meaningful portion of allocation for retail investors, definitely, potential participating brokers can include Robinhood, SoFi, Fidelity, Charles Schwab, etc. It will give everyday investors a chance to participate in this IPO at the same price with institutional investors, which is relatively uncommon for deals of this scale. However, there are limitations. Not every account will qualify, demand will exceed supply, allocations may be small, and a lot of investors will not receive any shares at all. So if a broker is offering any kind of participation, it's important to understand the requirements early enough instead of waiting for last-minute considerations. Number 3, secondary markets. This is a route most people tend to overlook. Before companies go public, early investors and employees may take their shares to private secondary markets for sale. Platforms such as Forge and Hive have become popular marketplaces for such activities. In theory, this allows investors to gain exposure before an IPO. I checked out the Forge marketplace today, and the SpaceX IPO was going for about $128 US against the IPO price that will be going for $135. However, in reality, there's a major limitation because most of these platforms require investors to have accredited investor status. Generally, they are designed for wealthier investors. There are also liquidity challenges and prices may actually vary. Also, information can be limited and private shares can often come with transfer restrictions. For most retail investors, this route can be difficult. The next move you can consider making is indirect ownership. So instead of buying SpaceX directly, you can buy companies that already own SpaceX. For example, Google parent company Alphabet owns a 5% stake in SpaceX, and upon valuation, that stake is worth $88.5 billion US. That investment has become one of the most successful corporate investments in the modern era. So we're basically looking at how this IPO is going to influence Alphabet and every other thing that Alphabet sits in. Another company where you can get indirect exposure to SpaceX is EchoStar, as it strengthens Starlink's communication capabilities. EchoStar owns about 0.4% of SpaceX. So you can get exposure to SpaceX while also owning an operating business, generating revenue from other activities. And basically, what would this do for your portfolio? It can potentially reduce risk relative to owning a single high-profile IPO. Then number 5 is the SpaceX ecosystem. When a company becomes the center of a major investment narrative, capital hardly stops at that company. It spreads, it searches, it flows through the ecosystem. So companies that build launch systems, manufacture satellites, support orbital infrastructure, any kind of company that will benefit from the expansion of space activities, companies such as Redwire, Rocket Lab, ASC Space Mobile, Planet Labs, Intuitive Machines, and a lot of others operating throughout the space economy will definitely be dragged along with SpaceX. So here's something more valuable than any specific stock. Exposure and ownership are not the same thing. Many investors become obsessed with owning the exact company everyone is talking about. The exact ticker, the exact IPO, the exact headline. Sometimes that works, but sometimes it doesn't. Because investing is not about collecting popular and famous names, but it is about generating attractive risk-adjusted returns. In many situations, indirect exposure may prove superior because you may get better liquidity, better valuation, more diversification, less concentration risk, and potentially better long-term returns. So the lesson here is not that you shouldn't participate or buy SpaceX directly if you can, but the lesson is that there is more than one way to participate in a specific thing. So some investors will buy SpaceX directly, some other investors will buy SpaceX via companies that already own SpaceX, while some others will latch onto the ecosystem and watch it evolve. The important thing is understanding your options before making a decision. Because in investing, knowing where the opportunity exists is just as important as knowing where the headlines are. If you enjoyed this video, do not forget to like, subscribe, and share. As always, before investing, let the data guide you. See you soon.